Okay, a day after CNBC TV18 broke the details of the government's draft pharmaceuticals policy, reactions have been coming in thick and fast. Before that, let me quickly run you through some of the key highlights of the policy. The government wants to impose a cap on trade margins. The draft policy says, and I quote now, the issue of unreasonable trade margins and bonus offers by various stockists, distributors and retailers has been adversely affecting both the industry as well as consumer interest. After detailed stakeholder consultations, the level of trade margins will be prescribed to create a level playing field for the industry and to bring down the prices, end quote. Now, apart from this, the policy also proposes to sweepingly change or crack down on what it terms as unfair marketing practices and limit loan licensing by companies. Loan licensing is when a company loans a contract to another manufacturer to make its drug. The centre believes that this is leading to an erosion in quality. Speaking exclusively to us earlier today, the CFO of Lupin welcomed the steps to boost domestic manufacturing in India. However, he also cautioned against limiting loan licensing and warned that more emphasis on affordability could adversely impact accessibility of medicines.
A substantial portion of our Indian revenues would actually come from, in fact, products that we do toll manufacturing for or, in fact, own licensing. And to that extent, there is going to be an impact. The draft contours are still emerging, so it's pretty difficult to kind of reflect on this at this stage. So I'm just waiting for, in fact, the entire thing to come out before we can make a comment. But for sure, it would have a negative impact on this industry. India is already, in fact, the cheapest market in the world, potentially. But I think there's a lot more to it than, in fact, just affordable medicine. There's access to medicine, there's awareness of medicine itself, and then availability of medicine. And in fact, affordability, too much emphasis on that would actually compromise on the other three as well, especially availability of medicine.
Okay, let's take this further. Loan licensing and capping trade margins are just two key provisioning of what is an exhaustive report. Archana Shukla is here with other key highlights. Archana, you've been going through that document. Take us through the fine print.
Well, yes, certainly. And it's quite a patient-centric or poor-centric policy, so to say, if we talk about whether you speak about loan licensing, where they're talking about the quality of products not being in line, or when they're talking about trade margins not being too high and the pricing not being in line with what the government feels should be for making drugs available. So the draft policy also very categorically talks about strengthening the drug pricing regulator, NPPA. They've talked about bringing more meat and muscle into the regulator's powers, so to say, and also expanding the purview of the price control regime. Just one line that I would quote from the draft policy where it says that the government will not be the regulator and regulator will not be the government. So very clearly indicating that the regulator will get more powers to see if the drug pricing regime is being followed the way it should be. The second point that we would want to point out from the draft policy is on the unethical marketing practices, where the draft says that there are only 2,500 salts being manufactured in India, but over 60,000 brands of those salts being sold in India at various price points. And this is leading to a lot of unethical marketing practices by pharma companies. There are lots of unreasonable trade margins and bonuses. So the draft policy now proposes that there'll be one salt, there'll be one manufacturer, and there'll be one brand. So which means one company cannot manufacture the same salt under different brand names for different marketing companies or different pharmaceutical companies. One positive point for the industry, and it's a welcome step that the draft policy talks about, is reducing the time DCGI takes to approve new drugs. It's saying that it would fix a limit of 3 months in which the application would be processed by DCGI and an approval would be given. The fourth and the most important point, again, is on setting up API parks so that indigenous manufacturing of API intermediaries and starting materials can take place. Currently, India relies heavily on imported API, particularly from China. And now this draft policy proposes that there will be much higher duty hikes for imported starting materials and APIs. So that's certainly a welcome move for the industry.
Okay, Archana, thanks for joining in.